The general consensus is that the banking sector will continue to grow as the economy grows. After a poor set of Q1 numbers, the banking sector is back to try and play Q2 in a better way. Q2 has been set in a backdrop of reopening trends, with the economy in general performing and bouncing back quite well, which is what the general consensus seems to say. However, banking at the moment has still not picked up, especially the large cap banking space has still not picked up with regard to where market prices are concerned. Hence, it comes as a little surprise that Bernstein has an outperform rating on HDFC Bank and Investec has also an outperform rating on Kotak Mahindra Bank. Let's deal with HDFC Bank first. Bernstein believes that HDFC Bank is a strong buy with a target price of 1890 a share. The stock closed at 1575 in trade today, which gives potential investors a 20% upside. The bank had lost some of its retail momentum due to RBI's embargo, and the bank has also been working behind closed doors on its digital banking platform. Mind you, HDFC Bank is the premier private bank, and Bernstein fully expects that HDFC Bank will come back. So the credit card ban being revoked is what Bernstein believes the start of the comeback. It believes that HDFC Bank will aggressively target recovery in the credit card play. The bank is more open now to digital partnerships, which is a positive change in stance for the bank. Last week, the bank had announced that it had teamed up with Paytm for digital payments. The stock has been languishing though. It is down. It is absolutely flat over the last 6 months. And this is despite the fact that the stock has gained 10% over the last 1 month. So Bernstein believes that it has a good potential of a 20% upside because it has done virtually nothing since the start of this year. Going over to Kotak Bank. Investec believes that Kotak Bank should have a target price of 2180 a share with a potential return of 25% given its current market price close. This stock too has been languishing with a negative 5% return in the last 6 months and 20% below its December 2020 highs. The management in its AGM reiterated that the focus is going to be on growth, whether organic or inorganic, and Investec expects growth of 16 to 18% from FY22 onwards. Investec also expects growth to gain full momentum in the next couple of quarters in the run-up to FY22 end and sees the price to book of 3.1 based on FY23 estimates to be quite reasonable for a bank like Kotak Bank. Now, Investec sees Kotak also as a cyclical stock, which means that as the economy grows, Kotak is set to grow faster than some of its peers as well as the economy, which should definitely advantage Kotak versus some of its other private peers over the next 3 to 4 years, as people expect the India growth story to play out quite well. Kotak is also a total financial services play with insurance, investment banking, wealth and asset management, including digital banking housed within one listed company. Being the two largest private banking plays, both HDFC Bank and Kotak Bank, this should help both these companies gain traction as growth looks up for the Indian economy.